Hello everyone and welcome to JSA TV and JSA Europe, the newsroom for telecom and data center professionals across the continent. I'm Jean-Marc Lehmann on behalf of the team here at JSA. Thank you for tuning in to this half-year special broadcasting series. Today we will explore hyperscale data center deployments across Europe, and our panelists will cover a range of vital topics from finance and investment to regulation, challenges, opportunities, power constraints, sustainability development, and the paramount role of co-location operators. And with that out of the way, let's jump right in. And it's my pleasure to introduce to you our exceptional executive lineup, which includes Barry Gross, partner and co-lead of data center sector for Siemens & Siemens. We've got Rajiv Gupta, global director for sales strategy and bids at Colt Data Center Services, and Chris Baxter, chief revenue officer at Apto. Guys, thank you so much for talking to me. And this is a big topic. Hyperscale is a big topic in itself, figuratively speaking, and actually on the ground as well. And then with the whole AI revolution era age, whatever you want to call it, it's all becoming just mega now. Before we jump into the questions about the market itself, let's just do a very quick sort of elevator pitch so you can just tell us of what each business does and your role within the business. And I'll go around the way you guys are showing on my screen. So I'll start with you, Chris.
Thanks, John. Really happy to be here. Chris Baxter, I joined the leadership team at Apto as Chief Revenue Officer. So I'm responsible for customer care, sales and marketing. Prior to Apto, I spent 11 years at Equinix, and there I managed the European Global Account Management team, looking after many of the hyperscale relationships there. And then prior to that, I spent 10 years at BT Global Services in their financial services team. So Apto was formed in September last year with the intention to develop and operate data centers for PIMCO, the Global Investment Manager. And we're designing and building those data centers for hyperscaler and cloud customers, targeting high growth and emerging markets in Europe.
Interesting, and there's an interesting roadmap being planned and deployed as we speak. So it's one of the newest players on the continent. And then Rajiv, Colt.
Hi, Joe. Thanks for that. I'm Rajiv Gupta. Pleasure to be here in this esteemed company. I work for Colt Data Center Services. We design, develop, and operate hyperscale data centers in FLAP markets, India and Japan. Been around in this business for a little over 7 years and have done a variety of outsourcing, stint with outsourcing companies in IT, public sector, healthcare, and God knows what else. So I'll not bore you with the detail. I'm based out of London. My role here is to drive the sales globally. So I work with my corporate development team and with my chief sales officer and come up with sales strategies to meet our targets and promises to investors.
And it's been an interesting journey as well, especially when you offset part of the portfolio to Atlas. And we'll talk about that a little bit later as well to see the new concept for Colt. And then Barry, Siemens & Siemens, it's about 6 months into the job now.
Thanks, Joe. Yeah, not even quite 6 months, just at the 5 month mark. So I co-lead the data center sector team at Siemens & Siemens. Siemens & Siemens is an international law firm with offices across Europe, Middle East, and Asia. And we advise predominantly data center developers and operators, as well as the funds and banks that finance them across multiple jurisdictions.
Interesting. All right. So I guess my first question is really around the investment and the financing of everything that's happening in the market. I mean, you can paint a bit of the picture of how fast everything is growing, where the demand is coming from. But what would you say really are the trends, and how are those trends around investments and funding framework shaping the rapid deployment of data center infrastructure? And I'll leave it open to who wants to go first, and then we can go from there. Otherwise, I'll nominate someone.
I'm happy to make a start.
Right.
So yeah, I think as you say, the growth is tremendous in this industry at the moment. So from a sort of investment point of view, obviously after a challenging period, I think inflation now seems to have stabilized. Interest rates appear to have peaked. And with the growth that we're seeing, I think the data center industry is a really attractive one for investors. There are stable tenants, relatively low churn levels, and compared to other traditional real estate sectors, it's still growing very quickly. That's obviously driven, as you've mentioned, by AI, but also just the ongoing digitization and cloud demand that was already very strong here. So I think in terms of trend, there's clearly a lot of investment coming into the sector. I think one of the things we might start to see as we go forward is more segregation of the sector from an investment point of view. So depending on the type of investor, we may see, for example, powered shell being a subsector there, and we'll see that continue to evolve as more investors enter the sector, but also as the demands are increasingly for hyperscale type data centers, as well as the traditional colo. And that drives longer time horizons, more land banking, less short-term development. So yeah, I think it's a really exciting time to be part of this industry and to invest in it as well.
Okay. And we will get into the geography discussion on what you just said as well, and where we're heading next. Beyond the more settled markets. But Rajit, Barry, any other thoughts around the emerging investment trends?
I will echo what Chris has just said, but I think with the demand, the competition is increasing. There are new players coming into the market, which obviously is putting a lot of pressure on supply chain. So there is still a massive challenge. Yes, the costs are becoming a lot more manageable, but availability of your GCs, availability of skilled resources, that pool is still very small. That remains a big challenge. Interest rates are still very high, so that is another issue. Chris mentioned about powered shell, and powered shell, I believe, fundamentally is taking off purely because various developers are trying to shorten the return cycles, and then they can deliver that fairly quickly compared to M&E fit out. That's where the risk sits as well, a big part of it. Availability of power in most of the developed geographies is a big challenge. So yeah, I mean, there are a fair amount of risk which are emerging, which people are just trying to deal with and then probably facing for the very first time.
And Barry, any first thoughts?
Yeah, I mean, look, I would agree with everything that's been said. I think that there remains a big gap between experienced investors and funders in the space and new entrants to the market. I think that new entrants still often have unrealistic expectations about what's available in terms of funding opportunities. Speculative development is not something that generally you're going to find a lot of people rushing into, because it needs a good understanding of the market. So yeah, there is a very good headline around the amount of money that's coming into the market, with lots of interested parties saying, here's what we're going to do, here's how much money we have released for it. But actually, it's not quite as easy to get your hands on that money if you're looking to borrow, because they tend to be seeking very specific product, which is very much at the low risk end of the spectrum, and I think that's going to continue to be that way for a long time. The money is there, but I think that there tends to be a higher expectation in terms of risk equity than perhaps some in the market would like.
And I think often as well, when we hear about these new projects coming to market, we talk about the capex side. We don't really talk too much about the opex side. Do you guys see the market understanding the investment side of the market, understanding that there is a long-term commitment to keeping the facilities running, or is it a conversation that doesn't need to happen that way because it will come down to revenues and how the business almost finances itself at some point?
I mean, I think one of the things. Sorry, go on, Rajiv.
No, I was just going to say, I think that there's a lot of it which is not actually recognized within the capex cycle, Joe. I mean, forget about going to the opex. Fundamental issue is you apportion a pot of money against known risk largely and how to manage them. If as a new entrant to the market, you do not recognize certain risk, you will not be able to basically put the funds against that, whether that is a capex or an opex cycle. And then the other thing is there was a mention about doing core and shell of risk. Problem with that is the cost of change in this industry is very high. So if you do something which is gonna be requiring to be changed by to meet a customer requirement, that cost can be very high, and that does come a big shock to a lot of people who have not been in data center development previously.
Yeah, the bill rapidly adds up.
It
Barry,
does.
you're going to say something as well.
Yeah, it's sort of an observation. I mean, if you look at the more stabilized asset side, where you might expect the financing to be on, say, a longer term basis, the reality is, whilst the terms are longer, the propensity to repaper those deals is quite high. They tend to be changed quite a lot during the life of the loan, and that could be for all sorts of reasons. It's because potentially expansion opportunities, or it could be changes in occupiers. It can be we want to bring new properties into the loan, or take them out. So I think that there is constant change, regardless of whether you're looking at a development pipeline or whether you're looking at a stabilized asset pipeline.
Interesting. And Chris, how do you see that from like a new entry to the market almost? You've been around for a year now. Sorry, I think you mentioned.
Yeah, so it was September last year the company was formed, but yeah, personally I've been in the data center space for probably 12, 13 years, and I think
I'm into company. Sorry.
yeah. I think what we're seeing is increasingly the demand from hyperscalers is for self-operated. So I think it's a relevant question, and there will be scenarios where we look at operated sites. But yeah, increasingly for the sort of scale that the hyperscalers are looking for us to build now, they are typically self-operated.
Okay, I think the other big piece of the puzzle here, and we'll go more into the power side after this question, because we're going to get there through the question anyway. But it's something around more the regulatory side. And then Barry, I know you talk a lot about sanctions as well, and I love talking about sanctions with you. So we can bring that into the play as well. But it's the regulation. I mean, we have a lot of sustainability regulation in the EU now, in the UK as well. We have data sovereignty. We have the AI books coming out of Brussels almost as we speak. How would you guys see regulation changing the gameplay here, changing the monopoly, not monopoly, but changing the gameplay that's happening in terms of developing all this infrastructure? And where are the hurdles? What's going to hurt or could hurt the development of data centers?
I think, as always, uncertainty is the enemy here, because it's often not having that certainty of what the data sovereignty requirements will be that make it very difficult to plan for the type of time horizons that you need to build these large sites. I think the huge growth that we've seen in the US is a result of having one jurisdiction generally, from a data sovereignty point of view, one perspective. I know there's some complexities within that, but far different from Europe, where country to country you can have very different public perceptions around where data is stored, where data is processed. So that, I think, will drive a different approach to machine learning and to inference of AI here in Europe. I think it will be less about huge mega campuses, and it will be more about distributed data centers. There will probably still be some very large campuses of kind of the gigawatt size, but I think we will see more kind of smaller 100 megawatt sites in specific countries, partly to address that requirement.
Well, the data nationalism and data patriotism are here to stay. I mean, I guess there's a bit of a fear the way the elections are going this year, taking to the extremes. This might not change so soon for the industry. But Barry, appreciates any views on regulations? I mean, Barry, I know you've got.
Look, I mean, yeah, well, of course, you're going to ask the lawyer about regulations. Um, uh, the reality is that the industry has for a long time managed without being particularly heavily regulated. GDPR was probably the main focus, and good arguments that actually that wasn't really a regulation that necessarily impacted the main bits of the industry. It was more the users and the customers that had to worry about their GDPR compliance. Whereas now, the regulation is impacting the industry, particularly around sustainability, but I think also generally, as Chris has raised, the complex area of data sovereignty and how that interplays with AI. And data gravity has very much relevance here as well, because of course, whilst we all think that data can easily be moved around the globe, that there is a cost to transferring data, and I think that isn't a regulatory issue. That's purely a cost issue that people will and are taking into account, especially with these large language models. If you want to do the analysis and you want to do the training of them, if you're going to have to shift a lot of data to a campus to do it, well, that could come at some cost. So I think that will also drive things as well. On the one hand, on the positive side, Europe, certainly the EU, can act with a relatively united approach, and that's what they're doing with the European Efficiency Directive. That's what they're doing with the AI Act, and that's a positive, because it at least balances out from a competition perspective. You're not forced to make decisions on a too localized a basis. Of course, the risk is, and maybe this is a benefit for, say, the UK, that perhaps other jurisdictions become more attractive for certain types of workloads and for locations. And again, there's some of that already happens because of power costs, and so the Nordics has grown significantly over the past number of years, but not for every workload. It's not suitable for every workload. So whilst my view is, yes, regulation is going to have an impact, I think it's just one thing that's going to have an impact amongst a number of different things, and it will be, as Chris has sort of alluded to, it will be driven as much by where does the workload need to be, what type of workload is it. Data sovereignty is part of that, data gravity is another part of that, cost of power is part of that, availability of land is another part of it. So it's another piece of a very, very complex puzzle for developers, operators, customers, etc., and the hyperscalers in particular to work their way through and make will have to be pretty long-term decisions, bearing in mind the sums involved.
No, absolutely, and we're actually, there's quite a few things I'm thinking about. We're actually talking about life cycles of what goes inside the data center as well. Whereas before was 7-8 years, and some people are hearing now 18 months for some hardware, which sounds very short term and quite scary. But before we even get into that, and especially the power conversation as well, Rigid, any thoughts on regulation? Because you've got real estate in 10 to 20 countries. Markets,
Yeah, no, we are in eight cities right now. But I think in Europe, this environmental directive, that's going to bring a lot of challenges. Not for the new estate which is to be developed. I think that is relatively straightforward. In fact, nothing which has been developed in the last 3 to 5 years probably is going to be affected by that. That's fairly easy to manage. But you have to think about, there are quite a few data centers which are supporting enterprise estate, large banks and things like that. Sometimes, we speak to a lot of customers, they don't even know what's sitting in their racks. Right? They don't want to touch it. Now you want to bring that to operate in a 27-degree plus environment where they even, if you mention going anywhere above 21, 22 degrees, they just start shaking. What the hell is going to happen to my kid? So that's one aspect of it. As I mentioned earlier, any change in the existing real estate is not an easy thing to do. and you are then working with the live environment. You've got businesses running on those systems. So how are you going to do that? I don't even know if the hardware manufacturers are really thinking about putting together the gear which can cope with those higher operating ranges, and what is the impact of that, uh, what sort of supply chain that is. So, and yeah, the existing estate, for example, in Germany has got about 3 years to come up to speed. I just don't really see how that's going to happen.
In terms of power constraints, do you guys, I guess, Chris and Rajiv, from an operational perspective, and Barry, from what you see with clients, do you what are the power constraints at the moment? What's worrying people, and can this have a detrimental impact on new projects coming to market? I mean, someone in the previous session that we just hosted as well even made the point that we might get into a point where there's power restrictions, where you're not actually allowed to use more than X amount of megawatts or gigawatts per year in a country for the data center industry. Is this a real issue in Europe? Is this really being talked about in the corridors, or are we still just kind of worrying about the unknown?
Yeah, I think that it's already happening. I think you can see in some of the restrictions that we saw in Amsterdam, some of the restrictions on new power agreements being allowed in Dublin. We've got new regulations coming in the UK around kind of use it or lose it, to try and prevent companies holding on to power offers and actually not off taking. I think there is a growing problem that needs to be addressed at a kind of country level and also a regional level. It's not always a power generation problem; it can be a power transmission problem as well. And I think partly where the shift towards AI may help this slightly. If you think about traditional compute hubs, are typically not where renewable or abundant power is being generated. So if you think about kind of a Frankfurt or a London, it's not where you're getting a lot of renewable power locally. That would be somewhere like the Mediterranean for solar, or Norway for hydro or wind. And I think the flexibility that the machine learning aspect of AI gives you is being able to place that compute load closer to where the land and the power is more abundant. So that does give some flexibility. But then when it comes to inference, that still needs to be close to the users. There's still a latency requirement there. So there is still a problem that needs to be solved. And part of that is looking outside of those traditional hubs and considering secondary markets, which previously wouldn't have been hubs for compute or for data centers. And the development that we've seen in Zaragoza, for example, the development in the Nordics, this is all being driven by constraints in those traditional colo and data center markets.
I agree to a good part of it. I think the industry will evolve. It will find its way, right? Power is not there. It's not that the industry is going to stop operating. We also have to be cognizant of the fact is, why is it that the hyperscalers or these CSPs are continuing to grow in these markets, right? It's the enterprises in there which is driving their business and their take up, right? These are the business hubs. So you would still need a considerable amount of power to support their growth. Yes, you can probably take the learning part away, but your generative AI, which is equally power hungry, smaller deployment, but it is equally power hungry, which is going to fuel your cloud requirement and cloud deployment. We believe generative AI is just going to be consumed into cloud, integrated into a cloud solution effectively. That would still need power, right? How is that going to happen? You have got micronuclear reactors, sort of a technology, fuel cell technology. So there are options coming up in the market. I think the markets or the regulatory environment would have to start looking at how to accommodate these things from a regulatory planning permitting perspective, because that still remains challenging. Data center industry receives a lot of bad press, which does not help. I just struggle to put my head around it. Many times I can't imagine 30 years back with all these servers sitting in a corner of an office in an air-conditioned room and going down, how that would have been more efficient than the way we are running and operating it now. But there are a lot of challenges which I think the the governments and then the enterprises collectively, along with the service providers, need to come together and find a solution to. And the markets will evolve as well, right? That you still have got a lot of penetration and take up of cloud, which has to happen globally, and that's bound to happen. It just is the speed of it.
Okay, makes sense. And then Barry, how much does power come up in conversations? Well, it comes up
I
in
mean, it comes up in every conversation. I don't think the concerns and the constraints can be understated in the current market. Everyone is desperately seeking power, and not just seeking power, but seeking it in a reasonable timescale. Because of course, that's generally the issue. Say in the UK, is not that you can't get a connection offer, but you might be waiting till 2035 or 2039, depending on where you are, in order for the connection offer to be delivered, and of course that's not going to work from even a medium term outlook. I do think that the industry is already playing and has a much bigger part to play in some of the problem. Let's be honest. The reason we are where we are is because the infrastructure that we all have in all jurisdictions was not built to cope with the way the world works today. And a part of that, and it's not the only part, a part of that is because it wasn't built with the data center industry in thought at all. Now, as a result of that, I think the industry has got to help the jurisdictions solve that problem. And we are seeing that to some extent with these sort of, I call them symbiotic relationships that are developing between the power generators and the power consumers. So obviously you've got your PPAs, but I think what's really interesting is how that can be used as a financial mechanism to effectively unlock the development of renewable energy. And hyperscalers have done this already, as well as large data center operators. What I think we need to be slightly careful of is that they do it in a way, the industry does it in a way where 100% of the benefit goes to the industry. So if we look at housing for another example, not necessarily a great example in the UK, but the requirement that if you're going to build housing, you generally have to deliver a level of social housing. Perhaps there's a solution for the industry by effectively, if you want a certain amount of power, you're going to commit to enabling a certain amount of power that you need plus some to be developed. And I think we'll have to wait and see how different governments look to solve the problem. I think that the industry would be well served in actually coming up with some innovative solutions and suggesting to government. I think, as Rajiv has said, the public perception of the industry is not great. We are all in the industry. We all understand how important it is, how fundamental it is, but it's very hard to convince someone on the street how important it is, because they just don't get it. Yeah, they will go mad if they can't watch their films on Netflix, but they don't understand that the only reason that happens is because you've got this whole data center industry. And so instead, I think that the best way of tackling the negative persona the industry has is actually by the industry delivering solutions that make a difference to people. And clearly helping deliver more renewables power, not simply for the industry, because I think that's one of the big issues in Ireland, is that there's perception that, yes, very good, you've helped build a load of wind farms, but actually you're sucking all that power that they're creating. So it's a zero-sum game at that point, but rather actually finding a way to effectively help deliver additional renewables for the wider society.
Interesting. I mean, perception. Sorry.
Sorry.
No, go on.
Sorry, just to add on to Barry's point, I think the it's important as well to look at it from the demand side as well as the supply side when we're looking at where we can improve things. And one of the advantages I think AI will bring is being able to dynamically manage workloads to reduce some of the peaks, because if you can spread out when that compute power is needed, and for some of those workloads they can wait until nighttime when there's less demand on the grid, it can actually reduce the amount of power that a data center needs to connect. So you're obviously always managing to the peak, but I think there's ways and means to manage the demand side as well.
Could one way of being, and I had a follow-up question, but I'm going to split it into two. So I'm going to split one for the industry and one for the consumer out there. So one of them would be if you guys agree with tax penalties when it comes to sustainability. So there'll be some sort of metrics where if an operator does not reach the sort of metrics, they get a penalty in the tax kind of thing. And then what you were just saying, Chris, about the different times of the day, for example, that reminds me straight away of washing machines. When you go and wash your clothes at night, you pay less electricity because it's cheaper at night. How could you, for example, do something like that a consumer understands that? So one of the topics that we had in the previous panel as well was that people post 10,000 pictures of their dog. That no one's going to look at them, even though they're not going to look at 10,000 pictures, but they're still being stored somewhere. How do you, I mean, is there a way to kind of bring that to the market like we did with washing machines, washing at night for cheap electricity? Is there a way to do it on that front?
Yeah, I think we see that on the enterprise side already, less on the consumer side where it's always on, it's always available, and you just consume it. But on the enterprise side, consumers can already choose where their data is hosted. They can opt for a slightly lower latency but a lower price, or they can opt to have their data stored further away that they take slightly longer to recover. So that same mechanism can be used to manage workloads. Is this workload urgent now to be managed immediately, or can that one wait until overnight or when power drops below a certain demand level? So I think the technology is available, and it's how you can then make that dynamic using AI, so it's done in real time. And I think there's also the point that there are, I think maybe Rajiv, you made this point earlier on, there's quite a lot of legacy equipment installed, legacy servers running that are not necessarily being fully utilized. So it's about how you find those servers and how you manage the power that you've got most effectively.
Yeah, it's efficient.
Problem is not about the hardware, right? Problem is about the services running on them, and then it's how critical they are to the business and whether they have a solution around it or not. So it's a problem. May sound simple, but there are so many things which are related to that. You can't just look at it a unilateral solution. You have to have a multi-pronged approach. I mean, we're talking about power consumption. Let's look at the heat waste which comes out of data centers. Right? All data centers would be more than happy to feed into some sort of a district heating system, right? Infrastructure does not exist. It's the same as power, right? I've heard of instances where the people are looking at adjacent to data center developing farms, micro farms, using the heat coming out of the data centers, right? So there are options available. One, are they commercially viable? Second, how to make them commercially viable? Third, who's going to bear the burden of it? Because if you ask me as an operator or an investor into an asset which has been, I contracted 5 years back, and you want me to take on the cost, that is just going to be an additional cost on my returns.
Mm-hmm.
It has got a huge impact on the gearing I have done on my asset, the returns I have got on my asset, and the valuation of my entire portfolio. Now, why would I do that? What is the incentive I have to do those? Right? So we have to understand there's a regulatory ambition of it, there's a commercial ambition of it, and then there's the environmental sustainability, ecological side of it. It needs to be balanced. Nobody's saying no, but nobody is really taking a lead on how to bring it together.
And I think, I think you mentioned possibly using taxation as a way to drive behaviours. I would always be very nervous of that kind of stick. You know, I think if we look at the European Efficiency Directive, you know, for example, it starts at 500 kilowatts of effectively potential load. The likelihood is that the most efficient consumers are actually those who are operating at below that level. And so the directive simply won't catch them. There is therefore nothing to push them to become more efficient, to look at how they're using their hardware. And I think that is always a risk. There is a tendency in government to go for the big boys. But the reality is that actually the big boys are well aware of what they should be doing, and can they do more? For sure, like everyone can do more, but they are trying, and their investors are driven because their stakeholders are all driven to deliver. I think what we need to have is a structure in place, and I openly admit I don't know what that structure is, but a structure in place which doesn't look to impose an end result, but rather looks to encourage constant improvement, because that's ultimately what we need to do. We need to reward people for constantly improving. You have a baseline, and you're going from that baseline, and you are improving, because we're not going to get there by a sudden leap. It's going to be by a focus on every day just being that bit better, and each of those 1%, 1%, they add up, and they add up very quickly. And I think that it sort of ties into what you're saying, Rajiv. It's a complicated mix of things, lots of different knobs and levers. We all know where we're trying to get to. What we just need to do is to play a bit around with the levers, just to ensure that we're going towards the right behaviors. And I think the challenge, a big challenge, is that everyone just wants the headlines. Headlines don't deliver change. They might look good, but a week later there's a different headline. And what we actually need is a system which rewards and encourages change.
It's action at the end of the day.
Yeah.
Sorry, Reggie, you were going to say something?
No, I can't agree more.
Well, and then I was going to, because I know we're getting to the last leg of our conversation as well. I just wanted to bring a bit of geography, and actually I'll throw in as well the customer type that's driving that demand. How is all this then that we just spoke about bringing in new regions into the map? So beyond the flat dish, so beyond London, Frankfurt, and all that, how are you guys seeing the new markets coming to be, and who's driving that demand, especially from a hyperscaler point of view? Of course, there's the big cloud boys, but who else is driving this hyperscale demand in the new up and coming regions?
Well, you've got the AI, which is definitely fueling a huge demand spurt in certain geographies. But beyond that, I think it is purely the penetration of the cloud, and it's a bit of a push and pull, right? So cloud service providers are establishing new availability zones. They have taken slightly different approach than they traditionally have. So they have gone to.
Oh, I think you froze. We'll go to someone else. This hasn't happened before, so please, John, to maybe give your side as well in terms of an operator while we try to get Reggie back.
Yeah, of course. Yeah, so I mean, we're very focused on secondary markets in Europe. When you look at, say, Frankfurt, it's approaching probably a gigawatt now of capacity. Vacancy rates probably 5%, and there are increasing regulations about the areas in Frankfurt that you can build data centers in. So it's very constrained as a market. As Rajiv said earlier, it's of course still going to grow. There's still demand there, and there are still companies and applications that have to be close to that existing hub. But what we're seeing increasingly is for those workloads that don't, and for applications that don't, the secondary markets look very appealing. It's typically easier to find land. There are a lot of ex-industrial sites that there are regeneration opportunities around. There is often renewable power available, as we've already talked about. And because of the vast scale that the hyperscalers are building at, we're finding that these smaller markets are actually skipping that initial phase that many of us went through, which is start with a carrier hotel, develop that into a colo site, then start to build larger scale next to the colo site, and it kind of grows organically. We're seeing in markets like Milan, Madrid, Warsaw, hundreds of megawatts being deployed immediately. So it's great for, as I say, regenerating some of those ex-industrial areas. It's definitely a positive for communities that maybe otherwise would have had a factory or a distribution warehouse or some other neighbor that's maybe not as quiet as a data center. But I think the key thing is that there's not necessarily the supply chain in those secondary markets to support that vast scale. So having the networks in place, building up the networks of local specialists, advisors, construction firms that can help build in these new markets is key, because there are some specifics to be aware of.
Barry, what you're seeing in terms of becoming?
Yeah, look, I mean, I think Chris has talked about all the different drivers that there are and where people are going, and we're seeing work in interesting a definite increase in the Nordics, not just in Sweden, but in Denmark and in Finland as well. I think that power is a driver for everyone, and looking for where the renewables power is. But Rajiv was saying it's the cloud service providers. They are just growing, and they're looking to deliver for more and more local enterprises in all those jurisdictions. So the market is changing very, very rapidly in terms of the locations that people are going, and it'll be very interesting to look back in 10 years' time and actually see how big the various markets are, and will there be tier 2 markets that actually equal in size at that stage some of the current tier 1 markets. I think there are certainly some markets that could grow. I wouldn't want to predict which ones it will be, because I think that there are a lot of variables involved as to why they will grow. Some of them will be pure customer driven, but others I think will be power driven, maybe to some extent regulatory driven, but I think it'll be predominantly customer and power driven.
Well, one thing is for sure, this is probably one of the most exciting sectors to be in, probably alongside with the energy space as well, because everything is changing. These are the two sectors in the world right now that are really, really changing. Before we do a very quick roundup about what you guys are going to be focusing on the next 12 months, on top of everything that we spoke about during this session, what would you say is one thing that we didn't talk about that's going to be crucial to the development of all this? So what did I not have asked you, basically, in other words?
Yeah, I think we touched on it slightly, but I think the collaboration across the industry is really key to unlock the opportunity in Europe. I think organizations like the EUDCA do a really good job of kind of pulling together all of the different stakeholders here and provide kind of a unified voice. But there are some amazing innovations coming in, and I think some of the work that's being done in kind of research institutions and universities, there's new technologies being developed around cooling, energy storage. And I think there's a lot that, because the numbers involved in data centers are so huge, even small incremental improvements can be really powerful. So I think bringing all of those various stakeholders together is really the key. It's definitely around collaboration.
All right, thank you. And welcome back, Rigid. I'll get you the question in a second, but Barry.
So I think one of the challenges we possibly didn't touch on enough is going to be around the scalability. Again, I think I can't remember if it was Rajiv or Chris mentioned sort of the supply chain, but scalability and flexibility. There are a limited number of GCs that have the capability to build the data centers and the campuses. And it's funny, Chris, you sort of said, "Oh, you know, we're not going to be in these mega campuses. You know, it's going to be 100 megawatt or so." And I'm thinking, 100 megawatt. If we'd had this conversation 5 years ago, it would have been wow. You know, I know we're talking about 100 megawatts. It's not.
Yeah,
It's not. So I think the industry is already doing this, but I think we're going to land up seeing a lot more around the modular side, and that will start to raise some interesting questions as well from a legal perspective as well, where product liability and construction, what's not construction, and so I think that is a solution to some of the challenges. And we may see some real innovation there as well in terms of quick deployment and flexible deployment, so temporary deployments. Who knows? So I think that could be quite an exciting area to watch over the next few years.
Okay, thank you. Rigid, can you hear us?
I can hear you guys. I don't know whether you guys can see me or not. I'm definitely having issues with my IT, so apologies for that. But I'm back and I can hear you guys. Can you guys hear me?
Yeah, not the greatest quality, but we can get through it. So I mean, the final question is going to be a quick, just 12-month vision of what each business is doing. So maybe Chris, we'll start. We'll go around, and then Rajiv, you can still try to get the video back. But then Chris, so what's going to be the focus on the next 12 months? Almost like a sales pitch for the next 4 quarters.
Yeah, well, it's really exciting time for us. We do have the benefit of kind of starting from a blank canvas, so we can very much be flexible on where we go, and we can be very led by where the hyperscalers need capacity. So for us, those conversations and the collaborations we're having with them are really key to working out where we choose, and we're developing a couple of really exciting projects in Europe at the moment, and continuing to build out the team. We've got some great people on board already, and there's some more hiring still to do. So yeah, exciting next 12 months, I think.
Yeah, we'll be looking out for those headlines, and then for the following through the headlines as well.
Yeah, that's right.
I mean, it's when you guys announced the project, and when we looked at the leadership team behind it, we knew it was going to be serious. So there's a lot of things that are announced, and there's no people to back it. But then there's the others that have people backing it, and when you look at it, you know it's going to be serious. Bridget, I think we've got sound. We don't have image, but we can hear. So if you could share with us maybe what you guys are going to be focusing on for the next 12 months.
So, first of all, apologies for this entire technical glitch. Completely unplanned. Apologies for that.
Got to change data centers.
Hopefully, you guys can hear me okay. I mean, we are sticking to our strategy, which is so we've never been into a massive expansion plan, although we keep looking at new geographies to extend in. We continue to go deeper into the markets we are in, and then we want to be a player in the markets we operate in, which can make a real difference. So we continue to march on that strategy and build more and then develop more in those markets.
Which again, with the parent company Coal Technologies, the whole ecosystem comes together. And our CEO Kerry, he's pushing for all this digital transformation to happen across Europe and beyond as well. And Barry, final thoughts on what's going to happen at Siemens and Siemens?
Well, guys, nearly 6 months into the role, we're already landing some great mandates, acting for developer operators. We're looking to do more in multiple jurisdictions, as well as working closely with some of the funders and financiers in the space. So really looking at the vertical in the space and building out the existing relationships that we have, and working for more. We're very, very committed to this space. We see it as the future. it's digital infrastructure, and I think it's the infrastructure piece that's the most important. It is the bedrock of modern society.
Absolutely, and I guess the key word for the three of you is going to be busy, 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 busy over the next 12 months. But
Hopefully.
please, Rajiv and Barry, thank you so much for talking to me. As for your home and on behalf of JSA, I would like to also thank everyone for tuning in. You can watch our 2 other half-year sessions on JSA's LinkedIn and YouTube pages, one discussing data sovereignty, AI, and sustainability, and the other looking at hyperscale data center development in Europe. With that, we wrap up today's conversation. From me and the team at JSA Europe, we hope you have a great summer. See you next time. And as always, happy networking.